Hey Jules, welcome to Coinscrum's Meet the Founders series. My name is Yatu. I'm an anthropologist working in the cryptocurrency space. We're really happy to have you here today and learn a bit about Insula. But before we do, can you say a little bit about how you got to the crypto space? Because I always find that journey quite interesting.
Sure. So thank you very much for having me. We'll be more than happy to introduce myself and then to answer all the questions you may have about Insula. So my name is Jules. I'm from France. I grew up across different countries. I studied in the UK at King's College London, and this is where I really learned about finance and about crypto. So now I started Insula back then at King's College London. And at first, the main goal of Insula was to create an intersection between traditional finance and cryptocurrency. So this is how we came up with an idea of a 100% crypto fund. So typically a fund that only accepts investments in cryptocurrency. We only invest then on other cryptocurrencies, and everything is running on the blockchain. So this is how then typically Insula, we came up with Insula ultimately with applying what we learned, I would say, the theoretical framework of finance, how to invest in general. And we found out that many methods that work well in the equities work actually very well and even better sometimes in crypto. This is, I would say, the gist on how it started at first. And from there on, you can build until, I would say, infinity, because it's traditional finance has a very long history, many Nobel Prizes, etc. And many findings actually do apply to this brand new asset class. So this is what we do in general.
Nice. Yeah, I think there's a lot of kind of professional there's a great interesting overlap happening between kind of traditional finance and crypto. And I mean, this year especially, there's been a lot more people coming in, hasn't there? So it's really, I'm interested to see how that's kind of coming about as well. Can you say a little bit about Insula? What is the project? What's the vision? And how does it work?
So the project is to offer an alternative, I would say, to people who want to have a diversified basket of cryptocurrency at any point in time. And we're really targeting people who believe, I would say, in crypto in the long run, in the crypto market, in the technology. They would like to be invested with typically a solution that is closed from an index typically. So they would like to own a diverse basket of crypto over time to typically surf on that, well, now continuous bull run over the years. So from there on, there are many options on this service. It exists since quite a few years. However, there are many problems because first, in investment management in general, usually customers are really dependent of the manager. So this is something we solve because we use blockchain. So typically, we created Insula so that even if Insula was to stop, if typically Insula one day, unfortunately, bankrupts or so, well, we made sure that basically our customer can always withdraw their funds. And this is something that technically does not exist, I would say, in the traditional market, because usually when Lehman Brothers disappeared, it disappeared for good with the customer's money in that sense. So that's a very well-known story. As well, there is the issue of transparency. For example, at the time, with everybody, I think remembers the Bernard Madoff case. Well, typically, the issue there in this case was that customers saw that their money was being managed, that they made eventually gains or so. and actually the money was not there. So because for the simple reason that they could not see what was there, because they had to then just trust the manager. So that's what I meant by being dependent on the manager. And then we solve this problem by using typically the blockchain that just, well, people don't have to trust what we say. They just have to look at what the blockchain says in terms of data. So for example, if the blockchain says, well, the Insula fund made 10% this week, you know that it's true because it's not us calculating the figures and then declaring it. So this is something brand new that we bring to, in general, asset management. So this is the first part. And then the simple reason why we're fully crypto is because simply, if you want to use such a transparent system that runs on the blockchain only, then you have to use crypto because the money, the cash on blockchain is crypto. So it's not, at first, in fact, we came up with an idea of a crypto fund that was not obviously running on the blockchain. But then when we really understood the power of pairing blockchain on crypto, typically we run on Ethereum, well, the one programmable currency out there, it is really interesting to see what you can do because you can just recreate then finance on the blockchain. You can recreate what typically the S&P 500. You can recreate anything.
That's really interesting, Jules. I just had a question about. So you have your own kind of crypto token, right? The Isla token. So how does that kind of work within your kind of ecosystem?
Completely. Thank you very much. So Insula Token has different uses. So first, I will explain why at first we created the token. Well, at first, it was typically to incentivize the group of people that was working with me. It is the people who helped me to launch the project in the early days. And we decided to then sell our Insula token via an ICO, mini ICO, a small size one, because we did at the time, the idea was not to, we did not needed, I would say, a huge amount for a pre-seed, which was just a pre-seed. And so then it was more about splitting, I would say, shares of ownership of the project with people who would help to make it a reality, so that then these people would have something to look at, which would be, in plain terms, the increasing value of then the token. So I would say that's the standard story of creating a venture. But then from there on, we added use cases to the token along the way to then as well reward our early investors and to then typically expand the horizon with what we can do with the token. So the use cases are typically you can pay if you can pay a monthly subscription that is called Insula Premium. Typically, we expect almost 100% of our fund investors to subscribe to this subscription because it's for the simple reason that we noticed that if you want to be providing a service on the blockchain, usually it's so technical and there are so many barriers that people would rather not do it if they don't have a dedicated, I would say, support, customer service, etc., accounting service, etc. Because otherwise, the customers, they see it as a very long way on maybe something that will not be finished. You know, they may think that they may invest and they may not be able to cash out typically, or will be left in the dark. So this is why we really wanted to implement a premium experience, premium service. So to then access this service, which is delivered by us, the people working at Insula, then customers can buy 499 Isla, and then it gets them 1 year subscription typically. So in the same fashion as Insula, as Spotify Premium, etc. This is just a subscription and you get more. However, you can use the basic version of Insula, and then you can invest on your own if you know how to use the MetaMask wallet, etc. So customers can invest they on their own. They can be autonomous, but if they want a service layer over this to be guided, then they typically subscribe. And then the second and perhaps maybe the financial, then we say value, is that we pay 1/3 of the profits Insula makes on the fund to the token holders. So then it is rewarding basically the token holders. But I would like to precise, only the liquidity providers, actually not all token holders. This is a very important precision here. That is only if you typically supply liquidity to our token, then you're eligible to get sent a part of the profit we make monthly, typically. So these are, I would say, the two main use cases.
Okay. Sorry, go on.
One last one, because it's still under development, so that's why I didn't mention it alongside the two main ones, is that we're implementing a voting system as well, where now users can literally stake their Isla inside Aragon DAO and then request a membership request to be able to submit proposal on open votes on the blockchain. So Insula has its space in DeFi. This is where it belongs typically. This is why we're not especially interested in listing in centralized exchanges. We're only looking at decentralized apps, etc.
Okay. Okay, so it's good to get to have that background to continue our conversation. So who are the people that are coming to Insula at the moment? Do you have any kind of information on their kind of background, and who are you kind of looking to attract in this kind of current climate in 2020?
Sure. So very good question, because I think the product market fit is always the pivotal determining point for a startup to know if it's going to have really customers or not in time. It took us 2 years, but we got to this point. Fortunately, the answer is positive. We have found then, yes, who we're supposed to target, who is interested in our product, etc. So we narrowed down to typically sophisticated investors in general. However, to be realistic, because we're a startup asset manager, I'm just starting my career as well, alongside all my colleagues at Insula. So if we want to grow, we need to start small as every venture and then incrementally grow. So we want to target sophisticated investors, but to start with, we want to then target ideally high net worth individuals who are, by definition, individuals, because the barrier is not as high as passing the compliance requirements of a very large asset manager, typically, because high net worth individuals manage their own money. It's completely private. There are less regulatory requirements, and it is way simpler and faster for them to invest than, certainly, yes, smaller investment tickets, but it is still very interesting, I would say, for us to spend some time acquiring these customers. So right now we're targeting, I would say, individuals and then very small family offices. I would say this is our immediate target. And then in time, the vision is to climb up, I would say, the institutional scale or so, and to just then target larger and bigger institutional investors in time. So then it would mean mainly, I would say, this is why we look after regulation a lot, because we always want to be ahead of, because it's the biggest asset managers that will shape the lobbying and the way the market is shaping, or banks. So this is the clients we would like to have in time. So we're always looking at how typically institutions are engaging in the lobbying and in the making of laws in general, I would say, in cryptocurrency, because it's absolutely an open. The states everywhere in the world are literally asking, I would say, crypto companies to explain where the market is going and what they're trying to develop internally, because of course the industry has a technical edge over the regulators, and this is why it's always good to follow, because if you want to target the institutional market, it's all about regulations in the end.
Okay, interesting. And so you're, just to check, your project is live now, or?
Yeah, the project is live.
Okay.
And typically we do have a few high net worth individuals then who have placed I would say relatively small investment tickets, but
Mhm.
it's growing fast, I would say, because people just see the performance of the fund that is good so far. I would say even very good. We're up 125% since July, and it's well, a lot of cryptocurrency have done certainly better than this. But however, holding only one or just a few cryptos, usually there is no risk. There is no approach to risk, so I mean, everything can go down the same day. In that sense, while our fund, that's what we try to avoid. So yeah, then now we're trying to then typically onboard bigger high net worth individual, and eventually to start partnering up with investment funds to then, if they want to have a crypto desk or crypto investment management desk, where they can typically offer the clients to invest in crypto via us. But this would be as well part of the business model, typically.
Okay, that leads us nicely onto the other question, which is, so how is the kind of the investment kind of happening on your kind of platform? So so using algorithms, right, to kind of, rather than people to kind of make those kind of trades.
Exactly. So maybe I could make a point on the name. So Insula has different meanings, but one of them, and the most well known, is that it's a zone of the human brain which is responsible for emotions in trading, and in general emotions, I would say. So typically, it has been discovered that very experienced traders, typically, they manage to keep their insula under control, I would say, and uh, to prevent ceding to panic, or to let their emotions influence the way they trade. So typically, experienced traders manage to inhibit the effect that this zone of the brain may have on their trading. And so this is typically I would say a sociological aspect of financial market. It's the psychology of financial markets. So then from there on, it's well known that in finance, it's mainly algorithm trading by now. Banks trading floors are being replaced by robots more and more every year. So with us, okay, so then the crypto market is just a market like another one. It is an electronic market, whether from very close or from a bit, taking a bit more distance. These two markets, equity market and crypto markets, can be assimilated as very, yeah, they're very similar pretty much. So then we thought, okay, let's use robots to invest on cryptocurrency, but let's use robots not to make more gains, but to actually slash out emotions in the investment. And this is what most of, I would say, none of the current asset managers in crypto are doing this. So we're using algorithm to then generate risk management on a more conservative approach to investment, a less speculative approach to investment, because by using robots, we can slash out the investment, the emotions that we may inject in our investment system. So the idea is to seek autonomy and to seek unbiased an investment system.
Yeah.
So,
Sorry, go on.
so then yes, just to conclude, we do not take the decisions on to invest on this or that. The selection of which crypto are going to be in the portfolio, this is automated as well. And then when to change them, it is automated. And to choose the proportions, it is automated as well. Everything is running on its own. So then there is no operational break, and then there is no emotions in the system. And it is relying on a mathematical framework developed by typically Markowitz, who is a well-known economist, and we use just the simple assumptions of diversification to then invest. So it's very simple. We just do not think that putting all the eggs in one basket is a good idea.
Mm-hmm.
And so far, most people in crypto are doing so because they invest all their eggs in the Bitcoin basket,
Mm-hmm.
which is risky because you're just holding one thing. So if you don't really have a security, so this is the idea. So
that's interesting. Just to we talked about the algorithms before, and so what other kind of things are kind of influencing this your kind of algorithm, if you can say so. No worries if you can't, but just wondered what kind of things are kind of undergirding this kind of algorithm, and is the fact that anyone can kind of take their funds out, does that kind of play a part in your kind of thinking about how to invest as well?
yes, so thank you very much. So I think to the last question that you asked me, I mainly then answered how we use robots to invest and to choose which crypto to buy, etc. Basically, we replace. I'm not hiring traders.
Mm-hmm.
I'm building software that is replacing traders, basically. So this is the first aspect. But then there is as well the entire part about clients investing in the fund and then clients removing their money from the fund.
Mm-hmm.
And usually, so far in traditional finance, well, the clients are dependent on the manager, on the investment manager. This is not something that customers may wish, because managers may not neither enjoy this control because it's just putting more pressure on them as well. So then this is what we came up with, was that we just run our fund on the blockchain so that customers can invest and withdraw whenever they want. So they click invest, it's invested. They click withdraw, it's just back in their wallet. We're not in the middle interfering with this, or with no ability for us to freeze the fund. So typically, this means that our customers are in control. Customer is king, because sorry, my internet got a bit shaky, but yes, that's back. Okay. So typically, if you invest at Insula, you have your own wallet, you own your private key, you are the owner of your funds. So then you can invest in your investment fund, but you can remove at any point in time, because everything is automated. So this is the second aspect of our automation, is that our operations as well are automated, and the customer can invest on his own in the fund. And then what it means is that the customer can see the performance of the fund on the blockchain. It is not us declaring it. So in general, Insula is fully disintermediated, fully decentralized. When you see some data about Insula, you can believe that it's true at 100%, because it's simply the blockchain that is saying it. This is not us. This is our, I would say, philosophy. So that then, I mean, you don't need to trust us. If you believe in blockchain and in crypto, well, then we have, well, fund performance is on chain, and it is the calculating agent is the blockchain itself. I mean, this is, to me, the main use case of a blockchain. This is a huge database that is supposed to be reliable, distributed, everybody has the same copy. So then our investors all have the same copy at the same time of the exact performance of our fund, and they can see how much they made out of their investment, and they can, so the data is right. And then if they want to get their investment back, typically they get it instantly. So this is something interesting that usually is not possible in traditional finance. And every investor's worst nightmare is that their money stays stuck with the asset manager. Let's say it. And the best example is Bernard Madoff for the past decade. And as well, there is the interesting part that if typically one day us, the management company, unfortunately something happens on Insula would be would typically disappear or so. Well, the really great thing is that all of our customers can always withdraw their money because the fund is running autonomously on the blockchain. So then, once again, they're not dependent on our survival through time to then recover their fund or so. Because the issue with typically a young asset manager like us is that, let's be honest, there is a certain degree of risk because this is a young venture. However, we made sure that there would be zero risk for our clients. So we are keeping us, the management of the company, the risk that we take for us. This is our liability. However, we do not extend this to our customers' funds because they're completely segregated from our internal cash flow. It is once again as well. Technically it prevents any kind of possible fraud as well because it's the customers' funds are the customers' funds, and the company's funds are company's funds, and our personal funds are our personal funds. So that's as well. So it allows to completely segregate this, while most investment management companies, well, the frontier between the company's funds and the customer's fund is not as clearly determined because you can never know what's happening inside a company. While what we do here is that we just show that the fund is outside literally of the company because it's on the blockchain. So that's we see the same thing as the client, literally.
Yeah, that's interesting. Kind of creating, just using that transparency for your kind of purpose, especially kind of, as a young kind of venture, you're kind of saying, okay, everything we do is transparent and you can kind of check it on the blockchain. Okay, that's interesting. So given that the DeFi ecosystem is still, I guess, quite new and immature perhaps, so what are the key risks to consider now, do you think, for kind of your project?
Completely. So here I will make a point on, I explained that typically with decentralized platforms such as Insula, on more broadly decentralized finance on smart contracts, well, in theory, there is no counterparty risk, right? Because these contracts are running, they're autonomous. As we said, if the management company, I will say, disappears, then okay, the money is still there, on custody, basically on the smart contract. That's understood. However, when we say this, that there is theoretically zero counterparty risk, that we make the assumption that there is zero risk that the smart contract itself disappears, right? Because it's assumed that, say, the smart contract is strong. However, there has been a rise in hacks, typically in DeFi. So to me, that's the number one risk, is that there is a natural selection going on because this is a Wild West. It's not regulated yet. It is very hard to regulate a decentralized ecosystem. Regulators are willing, but not so sure if they're in a hurry to regulate DeFi because it's going so fast as well. So typically, I would say that if you're developing on DeFi right now, you're really at risk of seeing your project hacked. Let's say it as it is, especially if you store a lot of money on it. So for us, that could have been a huge problem because we are an asset manager. We intend to store quite a big amount of cryptocurrency on smart contracts. So this problem needs to be solved. It is solved actually through auditing of smart contracts. So we chose typically to build on Melon, the Melon protocol, which was built by, it has really a great team. It's a very well-respected project based in Zurich, in Zug, actually. And then we thought this is very strong to build on because this has been audited, this is strong, and there's no, it's very hard to find really reliable audits of smart contracts. So typically, once again, the idea is not to build ourselves smart contracts and to code it ourselves. Absolutely not. Typically, internally, we try to use templates always or existing protocols because what has been proven to resist time is usually the best way to develop smart contracts, because if you develop something brand new, then you take a lot of risk to inject just a mistake in the code. Then auditing a smart contract is crazily expensive, so all the mistakes may not be found. So we try to build in a very conservative way. Here we'll take the example that usually airplanes, it's very well known that the operating system of the computers of airplanes are usually very old versions of Windows, for the simple reason that they're just proven to work well. They do something simply, but they're reliable because it's a plane, it cannot crash. That's the same idea as our fund. We'd rather use not the last version of smart contract or innovation to store the funds. If it's not audited, there is absolutely no way to do it. So we once again keep a conservative approach there, because I would say this is even more fundamental. So there is this aspect, but this has been solved. And then there is a regulatory aspect, I would say, that things are in terms of challenges, because it is maybe the first time, I would say, in history that there are some things that are technically hard to regulate or eventually even ban, because technically, I would say the notion of decentralization does not match, obviously, the way the world worked in the past. So then some laws are not adapting perfectly to this new technology, because it is, how could I say, the liability technically is pushed to smart contracts or robots who are autonomous. So then it's difficult to even look at something or to point at someone, especially that there is anonymity in the equation, well, pseudonymity, because now it is through there are some unchained way to do typically KYC or customer checks, etc. But this is only emerging, of course, so this is, I would say, another challenge. But if you enjoy following regulation, or if you enjoy following law, innovation in law, then it's, I would say, part of just the routine of setting up a business. And yes, it's literally, it has to be a routine, I think, if you're building a business in DeFi, because laws are not formally changing very fast. However, the direction that the future laws are going to be, it's changing every day. So then you don't really know where to look at or where to orientate your business, because of course you want to then shape eventually your business according to the future law projects, so that then you have less cost and then you are ready to go by design. So this is, I would say, a daily exercise to always remember what will be the crypto and legal world of tomorrow. What should I start building now? What should I stop building, typically?
I guess you have to always kind of anticipate that, don't you? This kind of what kind of legal frameworks would be coming in, what kind of regulatory kind of frameworks would be coming in. Okay, I think that's all we had time for today. That was really interesting, Jules. Thank you so much for just saying what Insula does, and just your kind of highlighting your vision and kind of going forward. And really looking forward to seeing how Insula kind of gets on in the future.
Thank you very much, and thank you for having me. It was very interesting very interesting questions that you asked, and to clarify on this point. So thank you very much.